Bajaj Finance. Their long-standing managing director, Rajeev Jain, has now been appointed as the vice chairman of the flagship lending arm of the Bajaj Group. Vishwanath Nair joins us now. This was the suspense point, wasn't it? Because his term ended as MD, and then everyone wanted to know where Rajeev Jain would sit on the board and in the larger scheme of things. I think Vish, you should start by talking about why everyone was so excited about Rajeev Jain continuing.
Right, Tamanna. So his term was actually ending, on the 31st of March, and this doubt was there in everybody's mind who's going to take over. Remember, he's taken over as CEO. Rajeev Jain has taken over as CEO of Bajaj Finance in 2007. Then 2015, he takes over as managing director of the company, and it's under him you're seeing that Bajaj Finance has risen to the heights that it has. He's turned around the company from just a two-wheeler financier to now the largest or one of the largest consumer financing companies in India, and that's essentially why there was a lot of interest in knowing who's going to take over from Rajeev Jain and whether the new person coming in is going to continue what he was doing. Now, interestingly, the person who's going to be taken over is his deputy, right? Is Rajiv's deputy, Anup Saha, and he has been working with Rajeev for a very long time. So obviously there's policy continuity, there's that strategic intent is going to more or less remain the same. Plus, remember that Rajeev is taking over as vice chairman of Bajaj Finance, but he's also an executive director, which means that he has some say in the way that the company's strategy plays out in the coming days. So that's obviously going to be a key monitorable how exactly this transition happens. Of course, most analysts are believing that this transition is going to be smooth because these two people have worked with each other for a very long time. So there is likely going to be some amount of continuity, and therefore business will be better. But I'm going to bring in Shweta Dapdar, Vice President of BFSI at Elara Securities. Shweta, welcome to this conversation. The first question I want to ask you is, are you seeing that strategic continuity with Anup Saha coming in place of Rajeev Jain as the MD of Bajaj Finance?
Good morning. So definitely, as you rightly mentioned out, the strategic intent, the big shoes which were supposed to get filled. And on the brighter side, Rajeev Jain continuing with Bajaj Finance board, as against the earlier speculations of he might being associated or getting elevated to the parent FinServ board. So this comes as a huge positive surprise. So his mentorship, his oversight and supervision across the next phase of journey for Bajaj Finance would be key and instrumental in driving the next leg of growth.
So the question then is, what are the targets that you might have? And quite a few of those are floating around, Shweta. People have upgraded their targets because that key overhang, as a lot of people are pointing out, is now out of the window. So are you saying go out and buy?
Yes, absolutely. So Bajaj Finance are or is part of our top picks in the entire NBFC space. And given the fact that NBFCs have seen a very peculiar, challenging scenario for the entire FY25, navigating across challenges, be it regulatory or sectoral trends and headwinds, here comes Bajaj Finance with a diversified business profile, wherein largely we are placing our bets on. And given the fact that the valuations have been lurching for over 2 years now, currently the way we look at Bajaj Finance is one, a diversified play, two, 25% business CAGR for next 3 years, and three, despite factoring in slightly higher or elevated credit cost, still we see the company delivering over 20% plus ROEs and closer to 4.7 plus kind of ROAs. So definitely a very strong return profile there. And with this news, the long-standing overhang is also behind. Definitely puts up a very positive and bullish stance on the name.
So Shweta, Bajaj Finance, a buy in your view at this point, one assumes. How would you compare to peers and in the larger pack?
Yes, so we rightly said, NBFCs have been navigating challenges, but currently what we are seeing is while the challenges have not fully receded, but at least stabilized. So be it in terms of asset quality and business growth, FY25 continues to remain slightly challenged. But as we move ahead in FY26, we definitely see recoveries coming in for unsecured and personal loan businesses, followed by gold finance and secured lending, and last but not the least, microfinance, wherein the recovery is at least few quarters away. So against this backdrop, and like mentioned earlier, we like Bajaj Finance. We are positive on Shriram Finance. We certainly believe that auto loans and CV cycle recovery is also underway, although there are divergent trends across sub-segments on this vehicle financing side. But definitely, I mean, if the rural cash flows and the monsoons ahead pans out really good, then I think auto should be back. And third, we continue to like Muthoot Finance in the gold lending space. We believe the market leader continues to, and given the fact that he complies fully with the regulatory stands and norms, we believe he will certainly deliver over 18 to 19% returns. And last but not the least, our preference and inclination for PSU financiers still stay because we believe CAPEX story is still not behind. So we continue to like PFC.
I cannot not ask you about Manappuram since you mentioned everything, and that's the other stock that is in focus. We'll look at what the pre-open rates are looking like, and of course they'll settle. You think this Bain acquisition is good news? Obviously, the stock will do well today, but in terms of a slightly longer term picture?
Yes, so this is definitely a turning point in the journey of Manappuram Finance, and post a lot of speculations and negotiations, Bain Capital bringing in this 44 billion much needed funding for bolstering the balance sheet growth as well as correcting the deficiencies, and it's coming at a very opportune time, especially after Manappuram facing the higher regulatory scrutiny on a couple of counts. Mostly, this will instill confidence in the minds of the investors as to the future scalability and professionalization that it will bring in the management of Manappuram. And that's also corroborated by the fact that the deal has been priced at over 30% premium vis-a-vis the 6 months past price of Manappuram. So definitely long way to go still. We certainly believe this is positive, but execution remains the key. And as the entire transaction unfolds by Q2, Q3 FY26, we believe there will be certain 1 or 2 quarters of kitchen sinking as well as the deficiencies and operational efficiency corrections happen.
All right, Shweta, thanks so much for joining us this morning and pleasure speaking with you. Thanks so much for the clarity that you provided.